Hello friends, welcome to Varicals Learning Blogs. This is CA Prince George and it's my Income Tax Act 1961 learning series. This morning I received two queries through LinkedIn. Both the queries were on the residential status of a person, section 6. And I found that both queries were very relevant for many other students also, CA students, and for many other tax professionals. So I decided to make a small video to address those queries and share with everyone. So the first query was on individuals. The query was why the legislature felt a need to introduce the 15 lakh income criteria in case of certain individuals. Now let me construct a scenario to explain this. Say there is an Indian citizen who is originally from Kerala and now he's based out of US. He has a flourishing business in US of which he is a proprietor. Now we all know that as far as Indian citizens are concerned or person of Indian origin, they are given a relaxation in terms of the number of days they can stay in India before they will be considered as resident. So this relaxation is given in the two criteria, the basic criteria for determining residential status. The second criteria. So 60 days was replaced with 182 days. This exception for person of Indian origin and citizens of the country was very important because in absence of this exception, in all likelihood, many of these persons of Indian origin and Indian citizens would have lost their connection with their roots. Nobody would want to come to India if after 60 days they are considered as resident and the income that they are earning outside India gets taxed. So in that sense, it was a important exception that the legislature has given to them. Now this, as I said, this exception was given to ensure that they are connected to their roots. They meet their relatives. Occasionally they come and meet their relatives, their parents, their grandparents. Now this individual in our example, who is from Kerala, after a couple of visits in Kerala, he realizes that there is immense business potential in Kerala in the tourism space. So he decides to start soliciting tourist clients from his the place where he stays in the town where he stays in US. Get clients from there to Kerala as tourists and help them explore Kerala, help them understand the culture, help them to find out the cheapest place to stay, the right food to eat, right things to experience, and make some money out of it. Now the whole objective of the man coming to Kerala is changed. Earlier he used to come to visit his family, which the government also wanted. But now the objective is different. And this individual also realizes that he will have to be in Kerala at least for 4-5 months every year to manage and maintain this business that he's newly started. His physical presence was important. Earlier he used to come and stay for 3 months. Now he is staying for 4-5 months. So clearly the objective is commercial in nature. And he also knows that staying in Kerala, he can control and manage the business that he is set up in US. So thereby, if he was a resident but not ordinarily resident in India, his income that he's generating in US would have got taxed in India, because he is controlling and managing that from India. But there was no such provision wherein this person can be treated as a resident but not ordinarily resident in India. So an amendment was made in the year 2020, and this criteria was introduced, that where the person has a business connection in India and the person is Indian citizen or person of Indian origin, in that case it will be assumed that the person is a resident but not ordinarily resident in India. So still a certain scope is given, certain leeway is given, that only where the person is controlling and managing the business that he is running outside India from India, he will be taxed, because he is not a resident. In case of a resident, the global income is taxed. So that in nutshell was the reason why this amendment was brought in. Similarly, there were situations where a person was able to evade tax in all the geographies of the world by carefully selecting his number of, organizing his number of days in various countries, including India, and becoming a tax zero man per individual. So there was another amendment which was brought, that if there is a commercial connection with India, and yes, this commercial connection, business connection, was quantified as 15 lakhs. I forgot to say that. Where the person has a commercial business connection in India, is earning in India an income which is 15 lakh or more, he will be deemed to be a resident but not ordinarily resident in India. And similarly, even if he is not a person of Indian origin or an Indian or an Indian citizen, but if he manages to be tax zero, in the sense if he manages to evade tax not just in India, anywhere else also, he too will be deemed as a resident but not ordinarily resident in India if he is earning 15 lakh or more from a source based out of India. So that in nutshell was the reason why the government introduced this extra criteria. Now the second question that was asked was with respect to companies, which was with respect to POEM, place of effective management in case of companies. So now we know that in case of foreign companies, they will be regarded as resident of India, where if the place of effective management is situated out of India. Now here the question was, it was a CA student who asked this question, that is it possible for me to, can I, because he found this whole concept of place of effective management a little confusing and a little subjective. So he said, his question was, can I break it down to parts and kind of make it formula based, or can I share steps that he has to follow to arrive at a conclusion whether a person, whether the place of effective management is situated in India or not in India. So in a nutshell, he was the student was seeking a formula to find out whether poem applies or not, whether poem is situated in India or not. So I, of course, I spoke to him, and I told him also, and this is generally for all the students as well, that this the channel that I have made is not is the objective of this channel is to bridge the gap between what you study in your books and the practical reality of life. And if I reduce very subjective concepts of income tax act, income tax law, to formulas and to 1 2 3 steps, then that objective will be defeated. The objective is to tell you that this indeed is a very subjective concept, and you can never have one answer for this. So just to tell you what I said in my last video also, just to repeat that, income tax law is like a prism. If you see from different angles, you will see different colors. Now we really do not, nobody can say for surety which angle is the right angle, which angle is the right angle to see the prism from. All the angles are right in their own respect. So there cannot be a right or wrong answer in income tax law as well. You will have to take a certain direction, and start gathering all the evidences, all the facts that supports that perspective. And if you are able to build that perspective better than other perspectives, better than others are building, then you will be the winner, right? So apologies for that. As I said, I can't give you any steps to follow. Thank you so much, and thanks for the interest that some of you are showing in these videos. Thank you.